guys, this is Andrew Keene from KeenOnTheMarket.com. This is your unusual option activity report for February 24th, 2012. The first one I want to look at is IRM. They do software, and when the stock was trading 31.17, a breakout above the cloud, customer came in and bought 1,000 of July 32 calls for 155. You might think that this is not a big trade, but it was 30 times usual volume, and they just had earnings. So when they just have earnings, that's good for option traders like myself, because I can buy volatility that's not inflated. So I can buy cheaper volatility. The market on the July 32 calls, when I looked at them, were 150, 160. I put an order in to buy them at 155. I got filled on a half position, and then when the stock ran up, I sold 20% of my position out at 175. Good for about 12% profit within about an hour. I do still have long 80% of my position on. So this was a good trade. LYV, Live Nation. They had earnings today. The stock got slaughtered. It went down to 945. Customer sold 10,000 April 10 puts for 90 cents. This was 41 times the usual volume. So when the stock was trading 965, it was a good sale. When selling puts at 965, stock rallied at 10, and these puts actually closed at 70. About 2 weeks ago, I remember a customer bought these puts for 70 cents. Like I say, I never know if someone has a stock position on against their options. But if you bought them for 70 and you sold them for 90, that would have been good for a good, nice profit. Next one, ALU. I traded this one before profitably, and I just didn't want to take this one. This is a very cheap stock. It doesn't move very much, so it's like watching paint dry. Customer bought 12,000 of the June 3 puts for 105. I think they're the June 3.5 puts for 105. I'll change that on the website. June 3.5 puts for 105. This is 3 times usual volume. Stock was trading 262. So the customer only really needs the stock to sell off about 15 cents to be profitable. But like I said, this is a stock that I've traded, and I just sat and watched it for 2 weeks, 3 weeks on end. And it has been profitable, but it's a slow grinding stock. I like stocks with more momentum, more action. Next one, Alcoa. Customer bought 10,000 of the March 11 calls for 12 cents when the stock was trading 10.50. But to be honest, I don't think Alcoa has any chance to get $11 before expiration. I did not take this trade. Last trade, CX. This is a very interesting one. This is a Mexican cement company and builder. When the stock was trading 7.32, customer bought the March 7 puts for 25 cents, 2,500 of those. This is 3.5 times usual volume. A lot of times customers buy puts as a protection against long position. So I don't know if it's buying puts because they think the stock is in a tank, or they're buying puts because they think the stock can rebound and they want protection. So a lot of times when a customer buys puts, I do not get on the trade. This is your unusual option activity report. Starting on Monday, this will be a paid premium service. The 3 services we're going to offer is one of trade of the week. That would be the highest probable trades in my opinion. That will be the trade of the week. I will still do the trade of the day for free on the website, but the trade of the week will be the highest probable trades. I cannot tell you how to trade your own money. I can just tell you how I'm trading my own. Second one, unusual option activity report. This will be a report that you'll be able to log in, or you can get it emailed to you. We offer it for free on the website currently, but this is going to be a premium service, and it will be accustomed with the unusual option activity video. We're going to do a daily video, and then we're going to do a weekly video of a recap of the best trades that worked out well and the trades that didn't work out so well. So it's going to be a very educational. Hopefully people can learn a lot from this. And the last thing we're going to do is the S&P 500 ladders. We're going to provide this with the daily video as well, and we're going to do a weekly video for that as well. So these are the 3 services. They will be available on Monday. Hopefully live trading room a week from Monday, so I'm very excited about that. That will be plugged in, and I will be talking about all the trades that I see going across the tape, and I will say how I am trading them with my money. I can't give advice or tell others how to trade them with their money. I can just say how I'm trading my own money. This is Andrew Keene from KeenOnTheMarket.com. Let's go over a couple of my earnings plays. I was 3 for 3 today. I was very happy with this. Let's look at the first one was Salesforce.com. I talked about this. I bought the 120, 140 strangle in March and sold the weekly 120, 140 strangle. I paid $269 for this. I got out of this about $330, so that's good for about 17%. It would have been a little bit more profitable if it went to exactly 140 or went to exactly 120, but since it popped a little bit to 145, trade's over, washing my hands, 17% in a day, not bad. I'll take that one on. Next one. Gap. I sold I thought Gap was a little overextended. This is a very similar chart to Dell before earnings and Hewlett Packard. I didn't think Gap was going to move that much. I sold the March 24-25 call spread and the 22-21 put spread for 48 cents total. So my break even is 21.52 right here, and 24.48. I put an order in the book to buy this thing back for 30, which would have been good for a 33% profit. I did not get filled, so I have this position still on. Last one, Deckers. I thought it looked really toppy at 92.5. I talked to my CMT that I work with at AlexKOTM. We thought 92.5 was a level it was not going to break through. So we took our risk versus reward, and we sold the 92.5, 95 call spread for $1.05. It can be worth $2.50, so we were risking $1.45 to make $1.05. What happened? Stock plummeted. Yes, would have been more profitable if we would have bought a put spread? Sure. However, if you look at all three trades, actually two of the three trades, I don't like buying too much premium into earnings. If stock would have just stayed at $91, it would have been the same result. Stock plummeted, went down to the 77 level. AlexKOTM on Twitter flagged that he thought the stock could test 80. It did test 80, but I don't want to buy too much premium just in case no movement happens. So I just sold this call spread for 105. I tried to buy back for a nickel today. I didn't get filled, so I have this position still on. As long as it doesn't rip $15 in the course of the next 3 weeks, which I don't know how it possibly could unless it get bought out. This will be a very profitable trade. This is Andrew Keene from KeenOnTheMarket.com. Have a great weekend, and remember, get in your premium services on Monday. They will be hot and flying off the shelves. Have a great weekend.